don't know why it's called Bitcoin mining. You're not actually right?
Scratch this whole episode. What are we going to call it instead?
Exactly. It should be like it's processing. Ultimately, you have tier 3 data centers, which have a bunch of redundancy. And then you have tier 1 data centers that don't have as much redundancy, meaning like generator backup so the power goes down, et cetera. So ultimately what these are is just a different form of a data center. And you have ASIC chips instead of CPUs or GPUs. And now there's a lot of ASICs going into kind of the traditional industries as well. So I think like you should really look at these sites as basically tier 1 data centers that operate loads that can be shut down if power prices are high and that are price sensitive.
Hey everyone, welcome to Talking Tokens, a podcast focused on interviewing the best crypto founders, market players, and up-and-coming startups that are changing the industry every single Tuesday and Thursday. I'm Jacquelyn Melanik, your award-nominated host and former senior crypto reporter turned entrepreneur, and I'm excited to be here with you all. Now, let's get into it. Today's guest is Asher Genoot, the CEO of Hut 8 Corporation. Asher took over as CEO earlier this year after Hut 8 merged with US Bitcoin Corp, a company he co-founded. Hut 8 Corp is an energy infrastructure operator and Bitcoin mining firm with data center operations across North America. We don't really talk about Bitcoin mining too much on this show, so I'm excited to have Asher on. Asher, welcome.
Thanks so much for having me. Excited to dive in with you today.
Yeah. And I started off a little bit talking about your background and everything, but can you tell us how you got into this space and maybe more specifically the company you previously co-founded and now are CEO of?
My co-founder tricked me. No, but in all seriousness.
It's a good trick.
I knew my co-founders since we were like 16 years old. We met at a Thiel fellowship. Peter Thiel has this thing where he pays kids to drop out of school to start a company. We met there.
Smart kids, right.
And basically, we've been friends ever since, kind of following each other's entrepreneurial journeys. He started his businesses, I've started mine. And fast forward to 2020, back in 2015, he started mining like super early and the head of our mining today, Carl, has mined one of like the first 80 blocks of Ethereum. And so Carl introduced Mike to mining, said, hey, will you invest this thing that I'm doing? I'm mining cryptocurrencies. Mike looked at it and was like, this is really just like an energy arbitrage infrastructure business. And back in 2017, built and sold a lot of the first kind of key assets to large companies today, Riot, Compute North, Marathon, et cetera, so forth. And so fast forward to 2020, we're sitting down ideating, where's the world heading? And he's like, you remember that business that I had built back in 2017 and basically supported the ecosystem towards building turnkey assets and selling them? I think there's a world to really do this at scale today with institutional capital based on where the chips are and kind of a slowdown in the advancements of the semiconductor chips on a year by year advancement with Moore's Law. And I think we can operate more efficiently and we can create more innovation around the business. And so I started looking into it. And when I looked into it, I thought like these assets were really interesting, kind of tier 1 data center assets that could trade around like loads, especially in places like West Texas, where there's a lot of renewables. So it was just two naive kind of entrepreneurs saying, hey, let's go build something that we think we can create value in. And then it's been a fun couple of years of a journey and really building something I think that has been pretty meaningful, and we're excited to keep on scaling.
I mean, you're not naive, though. You guys ended up working out for the best in the end, right? How did the acquisition between your original company and Hut 8 come about, and what kind of made you want to lead the future of the company now?
Yeah, I think the naiveness was thinking it would be easy and all the work that went into it.
Okay, that's fair.
So with Hut 8, ultimately, they were a publicly traded Bitcoin mining company that really focused and like had their value around like they owned a large Bitcoin stack, but was struggling around the operations of their data center and really executing in kind of operational rigor and being leading there. Whereas on US Bitcoin Corp side, we were an energy first kind of infrastructure company. And we really prided ourselves on building, developing sites, finding energy and operating those efficiently. And so they needed an operator. It was a great way for us to go public as well and kind of scale at a larger rate. And so that was what prompted the marriage for the two companies to come together.
You have the unique look into having a public crypto and or specifically Bitcoin focused company that is something that a lot of companies in the US focused in crypto don't get access to. You've been on both sides of the coin. What do you think is like the major differences aside from the obvious?
In regards to scale, we're very early in our journey and what we want to become as a company. And so the joke I tell internally is we're a large startup public company. And so instead of thinking of ourselves as a small public company, we're just a large startup that's public. We're very early in our journey. We believe we have a lot of opportunity for room and for growth. And so for us as a public company, we have the benefits of being a public company, which is the capital markets, being able to talk to investors, engage, and being able to have kind of the credit worthiness to work with large counterparties. And then we also have kind of large bills that we have to pay in terms of compliance, regulations, and audits in order to be public. So it comes with its pros and cons, but we're excited and we have a lot of shareholders as a part of this journey with us today and excited to build for many years to come.
How do you kind of look at the IPO market in general for the crypto space? Do you think more companies should IPO? What is your kind of opinion on that?
I think the question is why? What is the benefit of being public versus private? Whether that is access to the capital markets and what is the difference between public capital markets versus private capital markets, liquidity for shareholders, what is the company and how big is it and where is it in its evolution cycle? So I think the answer is it depends. And when you're public, you have to really address investors in real time and you have to manage your business and be able to give quarterly updates and have earnings. Whereas in your private, you have more room to build and to scale and to focus on building and not just kind of updating and reporting. And so I think it depends on a company's journey, their life cycle, and ultimately asking themselves the thoughtful question of why now, and what do we think we will gain from this, and what do we think we'll lose from this?
Yeah, that's a fair answer, Asher. I like that. Moving into more of the Bitcoin mining space, that's probably like the main chunk of the conversation today. How do you kind of look at it compared to when you first really started getting into the space back in 2020 versus, or where we are today compared to that?
Scale, commercialization, industrialization. When we first started, we were managing 1,000 machines. Today, we're managing hundreds of thousands of machines across dozens of facilities. And so when we first started, you can manage 1,000 machines. You can see where they were plugged in. You can run around, look at the blinking lights, fix them. Yeah. Today, we have a full software team, data science team, energy team, corporate development team, EPC team, and the list goes on. We're building large scale energy resource and energy load assets, and we have to manage those in real time. And so it's a completely different business when you think about it. If we were to start it today versus when we first started, I mean, the industry is so much more evolved and advanced than it was. So I'd say that's the first. I think industrialization, commercialization is where is this industry heading? We announced a pretty large deal a couple of weeks ago with Bitmain, where we're designing a data center now that's liquid cooled. So it's similar to kind of like all this AI hype and noise around liquid cooled data centers with NVIDIA. And this data center is redesigning the Bitcoin miner. And instead of the ASIC chip being kind of like a shoebox design factor, it's going to be a rack ready design factor where you can place the machine in a data center rack. And so thinking about where is this market going? What does the evolution of that look like? And how do we be a part of the innovation of where the market heads and scales? When
you say thousands of machines to hundreds of thousands of machines, what do you mean by machines? Like literally Bitcoin mining machines or something else?
That's right. Yeah. Units of these Bitcoin mining machines. Yeah. The scale is grown exponentially.
You said it's become more advanced. What do you mean by that?
So I would say when we first started, the business was pretty simple, which was
mine Bitcoin.
Mine Bitcoin, you plug in the machine and you mine Bitcoin, right?
Yes.
And it's gotten more advanced because one, with scale, you have to operate it in a very, very different manner. You can have a couple people watching 1,000 machines. You can't do that with hundreds of thousands of machines with the same processes and systems. So I think that's the first. Second is if you're off by 100 basis points or 10 basis points, those are massive economics at scale. And then your load profile. we're consuming large amounts of power at these data centers. And so we have to have a lot of software that speaks with the grid, shuts down the facilities when the grid needs power, when power prices change. And so we have like whole energy trading teams and platforms where, for example, our site that's just interconnected front of the meter in West Texas is very different than a site that's connected to wind power, because now we have to look at the wind curves and when does the wind produce power versus the grid, what are the economics? And so there's not only scale that has created complexity, but depth and dexterity in the operations that created complexity, where now we're solving not just a lot more problems, but a lot different problems in addition to the ones we solved originally, because of not only where the industry has evolved, but how valuable these loads are in grids to help kind of harmonize and balance those grid ecosystems.
You brought up wind-powered grids. Do you see a push across Bitcoin mining operations to make it more green?
So green is a really interesting
term.
Word, because it like the simplest way to think about green is you pull from green power, right? But then when I think about green, it's sustainability. How do you actually help create more resilient grids? How do you drive more renewable producers onto those grids? And how do you grow? So today we have a very large wind farm that powers one of our Bitcoin mining facilities. The wind farm is 280 megawatts. That's hundreds of thousands of homes worth of power, right? But that wind farm was depressed and they were losing money. And so the generator of that wind farm probably is less incentivized to go build the next one if they're losing money on the current one. By placing our load there, we're able to help them with that negative pricing and it becomes more economical. And so we're consuming green power, we're pulling from the grid when the wind is not producing, but we're also helping that generator be profitable to go invest in the next project. So we just announced another 205 megawatt wind farm that's interconnected to the grid as well. We like it because we believe a lot of wind and solar is being produced in areas where there's not a lot of demand. And so thus pricing is cheap. And so commercially, it's great for us because we get really cheap power, and it's great for the generators, and it's great for the kind of green component because you're helping drive growth and economics into that industry. But I think green should be about sustainability. And are you making a grid a better place, or are you just consuming for yourself? And because Bitcoin mining allows you to curtail when power prices are high or where there's not enough supply, naturally, if you have kind of smart and rational actors, those assets can be really helpful for the grid and consume power when no one else wants it and help drive economics into the grid as well.
Maybe this will go into my next question too, but I wanted to know, like, what do you think is the most misunderstood part about mining? Because obviously you've seen the articles, you've seen reports, you may or may not agree with them. But what do you think is like a message that you would really love to get across that either one, our listeners wouldn't know, or two, you think they might have wrong?
I don't know why it's called Bitcoin mining. You're not actually right?
Scratch this whole episode. What are we going to call it instead?
Exactly. It should be like it's processing. Ultimately, you have tier 3 data centers, which have a bunch of redundancy. And then you have tier 1 data centers that don't have as much redundancy, meaning like generator backups if the power goes down, et cetera. So ultimately what these are is just a different form of a data center. And you have ASIC chips instead of CPUs or GPUs. And now there's a lot of ASICs going into kind of the traditional industries as well. So I think like you should really look at these sites as basically tier 1 data centers that operate loads that can be shut down if power prices are high and that are price sensitive. Like the whole Bitcoin mining element, I think, creates this negative connotation that like mining, I think historically is like harmful for the world because you have these big mining refineries and you're digging into the ground, you're hurting the earth. And ultimately you literally just have buildings that are data centers housing servers that run compute on them, just like any other data center. And they're built differently because of the economics that drive that. But you could run, for example, our new Bitmain agreement, you can run those chips in a traditional data center. It's just that data center is way overbuilt for what you need. And so you're spending a lot more money than you need to. But I think that's the most kind of common misconceived thought about it is people think mining and they're like, that's not good. People think Bitcoin or crypto, and folks who like it love it and folks who don't. But ultimately, we're just building data centers that can participate in demand response programs. When the grid needs power, we can shut down the data center and be able to support the grid.
So you think we should change the name to data centers?
Yeah, I think we should change the name to kind of call it Bitcoin network processing, like just
Oh, that's getting long, Asher. That's getting complicated.
Yeah, you can help me. You can help me refine it.
We'll brainstorm after. Yeah.
Exactly.
You said it was tier 1. What would you classify as like tier 2 or tier 3 data centers, or is that something that I'm just making up right now? Like, are there separate categories to it?
There's tier 1, 2, 3, and 4,
Mm-hmm.
and it really comes into like reliability of the data center. So when you think through like tier 3 and 4, you have N+1 or 2N. What that means is, let's just say for every server, you have a switchgear, which is like think about it in your home, you have like the breaker box, right? That like houses your electricity.
Yep.
And so instead of one breaker turning on and off like the lights in your living room, 2N means you have 2 of those. So if one of those breaks, you have a backup. So you create kind of that uptime and reliability. N+1 is like for every 2, for example, you have 1 backup. So you have N+1, that extra 1. And so as you go from tier 4 to tier 1, essentially you have less redundancy. And you need that redundancy if the data centers are powering Zoom or they're powering Facebook or Instagram, because you need to be online all the time. But if you're just running compute that if it shuts down, it doesn't matter, you don't need that level of uptime. So you don't have to spend all that money building all that extra redundancy there.
What's something that doesn't need to be up all the time in this context?
Bitcoin mining.
It doesn't?
No, because Bitcoin mining, if our data centers are off, there are other Bitcoin miners around the world that are online protecting the network. And so as a data center, if we're off, it doesn't make the network less secure. And so as a result, us being on and off, it should purely be an economic decision and not a reliability decision. I'll actually give you a completely different analogy that I'm making up on the spot right now. But
go for it. Yeah.
Imagine if like you had $1 million of cash in your house, right? And everyone knew you had $1 million. You probably at that point need to create like a really strong door for like a safe.
I need
security
a bigger mattress. Yeah,
exactly. And so like you want to create multiple layers from someone trying to steal that money between the door and that money. So you basically have like 3 layers of protection, right? But imagine you had basically just a hard drive holding your Bitcoin there and it wasn't cash and no one can get kind of your codes going into it and you weren't there and they couldn't convince you to give it to them. Like you wouldn't care as much if you could just back it up on another server elsewhere. Right. And so you probably wouldn't add 3 doors. You just have your front door with a doorbell on and that's it. And so when you think about data centers, it's like a far-fetched analogy, but it's the same idea. It's like, if you care about uptime, then you need to create all of this extra money to basically build to allow you to have uptime. But if you care about economics, then you're going to drive towards like, what's the most cost-effective way to basically put the server in a house without having like 4 different doors that protect it, because all you need is a roof and shelter so the server doesn't get wet. And so it's like that same idea, which is like if a data center is for powering things that people use live, if you go down in your critical infrastructure, that person using that compute is going to get affected. If you're just helping basically secure the network, for example, Bitcoin, even GPUs don't have to be up 100% of the time because they're running their basically training models for AI, then you can have environments where if the economic decision is better to shut down, you can shut down and it's not going to hurt whatever workload that you're building.
Okay. See, I didn't know that. I'm learning new things today. So thank you, Asher. That's super helpful. I also wanted to talk about Hut 8's like energy first strategy, kind of announced back in July after the $150 million investment that you received. Can you kind of walk us through like what that is about, what the money will be used towards, and then we could go from there?
Happy to do so. At Hut 8, we tell the world that we're building a next-gen energy infrastructure platform. We're big believers that as the world becomes more advanced, as quality of life increases, as technologies advance, the need and consumption of power will only increase. The World Bank actually came out with a really interesting chart that showed a linear correlation where if the GDP per capita in a country, which like is a proxy for like the wealth and like the quality of life, is higher, it's directly correlated with the per capita consumption of energy. So meaning the higher the GDP is in a country, the more energy it consumes, almost on a linear correlation. And so why that's really fascinating, which is the wealthier a country becomes, the more energy they need to fuel that country. And our
Yeah.
belief is, as technologies advance, as Elon Musk sends rockets into space, like all of that is powered by energy, right? All of that is power, needs energy to power it. And as these use cases get larger and larger, and you're seeing this today in the AI world with data centers, like it's hard to find that much power available to understand the grids. How do you use that power in a concentrated area that is sustainable and that's manageable? And so for us, by building a business at the intersection of energy and power and the intersection of next generation technology and infrastructure, we believe we can build a really valuable business over the next decades or two to come. And so for the company today, it's like, okay, we understand power really well. We can put Bitcoin mining data centers there that can need to consume the power and that can power the Bitcoin network and create security and resilience onto that network. We also have these plot of lands that are good for AI data center capacity. So why don't we support data center and training for AI? So now we can help support this next generation technology. And so those are our two main focuses today. Those will not be our only focuses if we fast forward 10 years from today. And those will be, I think, two core pillars of the business. And we'll have more as we grow. But Co2 saw that opportunity, saw the assets that we own. And I think because it's a little bit complicated, we're not a Bitcoin mining company, we're not a data center company, we're an energy first infrastructure company. And so I think the market has taken time to understand that. And I think Co2 was willing to do the work, dive in deeply and understand it and invest into the company and what the company's capable of in the years to come.
How many companies are at the same like crossroads that Hut 8 is at in terms of everything you just said? It's not just a Bitcoin mining company, it's not just a data center, and it has energy and it has all these different aspects. You said it way better than I could. What's the competition like here?
I think we have competition within those pillars, right? You have power companies that are trying to sell their power, and that's their side of the business. You have Bitcoin mining companies. You have some Bitcoin mining companies that are trying to build data centers, but they're focusing on the right now. And we're trying to focus on what the world looks like in 10, 20 years from today, not just the right now. We have to succeed and build in the right now, but also understand what the long-term vision is. And I think that's ultimately what really differentiates us and makes us think differently. And we're comfortable in having that long-term orientation. And so when we think about the evolution of this company, we want to be really, really great power experts that understand how the grid operates, where transmission's coming online, what load profiles look like. We want to be great infrastructure builders and understand how to build infrastructure faster, better, cheaper than others, and maintain really high quality. And we want to be great technologists that understand the technologies that are going into the infrastructure, consuming the power, so we can build everything thoughtfully and purpose built, rather than having those three be kind of separate, disparate kind of parts of the business. But we don't want to own power generation, right? That's not our expertise. We don't want to be spread in bandwidth, et cetera. We're not building the end software solution app that is going to the consumer. So we're still being very hyper-focused. We want to have that breadth of knowledge. And like, this is not the first time that large loads have consumed power. If you think about it, if we scroll back, like Alcoa was a large steel company. They started generating and producing steel in the US. And then they started building power plants next to those campuses. And so if you look at some of the largest Bitcoin mining facilities today, they're actually old Alcoa facilities that used to be steel mills. And then you have paper mills that are a similar situation. Imagine if those companies 100 years ago said, you know what? We're not just a steel manufacturing company. We're actually, whatever the highest and best use case of power is, those companies would be the largest data center companies. They'd be the largest Bitcoin mining companies because they had access to the power that fuels everything. And so I think that's how we're thinking about the world. And we're excited for all the existing technologies and all the technologies to come.
Yeah. You also talked about before integrating AI technology into your operations. I know Hut 8 has done a number of AI deals. A number of AI workloads are being supported by you guys. Can you kind of walk us through like what purpose it serves in like today's world for your operations, and then like, as you said, to the future?
I'll answer that question from two parts. One is the businesses that we're building to empower AI. And two, which is more fun, I don't talk about it often, is like how are we using AI internally to help us be more efficient, right?
Let's do it.
I think on the first, we have power, we have data centers, and we have compute. And so on the AI side, we're looking to build data centers for large customers, hyperscalers, you can think, and the likes, and allow our data centers to power their AI chips and their computing use cases. In addition, in our compute layer, we buy the chips directly from NVIDIA through an entity we have called HighRise.ai. It's a company that we incubated, and they basically sell that compute. Instead of selling the data center, the chips are put into the data center and they sell compute, think like an AWS, like online, like cloud platform to the end user. So in terms of the AI business, that's how we're building and growing. And it's really interesting. A lot of demand, obviously. And we think a lot of opportunity and economics there. Mm-hmm. And because we believe in AI, we're building infrastructure for AI. We also push the teams internally to use AI, right? Whether that be as a part of their day-to-day, as they're doing research, if we have different kind of knowledge centers where we're driving information to. But I think it's important to not just build a data center and say, yeah, AI is going to be the next thing. Like, we should actually use the technology. AI on it. Yeah, exactly. Like, do we intrinsically believe that this can actually change the world and how we operate, right? And if you think about the dot-com bubble, like, the question really was not which tech companies are going to be successful. The question really was, do we believe that websites and working on the internet and buying things on the internet are going to be a real thing? If so, then the internet is real. Now it's a matter of who's going to win. And so I think the same question exists today, which is like, will AI just be a part of our everyday? And if the answer is yes, then it's what companies will win. And for us, it's less about what companies will win. It's let's just build infrastructure to support this ecosystem if we believe it's going to be here to stay. And like, I'm a big believer, if you fast forward 5 to 10 years, I mean, everything we're going to do is going to be so naturally intertwined with AI, just as it's so second nature to hop onto a website for a company as big as Apple and a company as small as your neighborhood pizza store.
Mm-hmm. Do you think it will become more commonly known?
Yeah, and I think it'll become more commonly known on like, what does this actually mean, right? Safety is obviously a big thing that I think we'll need more and more focus on because of the power of this technology. But I mean, every business down to you making orders at your local restaurant, there's no reason that can't be just built by an AI bot that responds to your questions, reservations, et cetera. And so I think jobs will be replaced by AI, but I also believe new jobs will be built by the AI ecosystem and opportunities, right? And you see this in the industrial revolution. You saw this in the dot-com era. Like, in every new revolution of technology, jobs get replaced and new jobs get created based on new use cases.
Mm-hmm. Yeah. I mean, given that mining is a pretty thinly margined business nowadays, what other opportunities do you see for Hut 8 to differentiate into? And how does, I guess, adding AI into this, what role can that play in that?
So we see Bitcoin mining as an infrastructure business where margins are based on how well you operate and how low cost of an operator you are. If Bitcoin rips up, then yes, we'll make money in really high margins for that period of time.
Let's go.
But ultimately, yeah, exactly. But ultimately, we've always seen mining from day one as like lowest cost producer wins kind of business in a normalized state. And obviously Bitcoin volatility adds to the volatility of margins, but ultimately kind of compress. I think AI is another infrastructure business. There's a lot of excitement today. The numbers are much bigger. I think what's interesting about AI and data centers is the counterparties there are not crypto companies. They're the Microsofts, Metas of the world, and so forth. And so you're able to have a lot more capital efficiency because people will invest equity and debt. You're able to lever up projects. And so your cost of capital is lower. You have less risk and less volatility, which allows you to create a business that should trade at a higher valuation based on your profitability because you have less risk associated with it and more clear direction. And so for us, like, underlying is power. We own power. We build AI data centers. Investors understand it. We can put leverage on it. We can have really great levered returns. And then we have sites that like are not great for AI because they're in the middle of nowhere today, but maybe in 3 to 5 years, they could be really great for AI data centers or for some other use case. And I think like people forget, but everyone's looking at Bitcoin mining sites now and like, oh, can we build AI data centers here? 3 years ago, when at the bear markets of 2022, no one would buy a single one of these sites, right? Like
they didn't want it. Yeah.
Exactly. No one wanted it. And so that's why we love Bitcoin mining, because it allows us to capture sites that people don't think are valuable today, but we do believe in the long-term thesis that power will become more and more valuable and more scarce. And so by having a tool that allows us to just capture opportunities, we believe we'll be able to harvest the value of those megawatts for many years to come.
Yeah, I was going to ask because you said it was kind of places that maybe people didn't want to like scoop up. You have a portfolio of 19 different sites, correct? That's what I read on the website.
We got a lot these days, yeah.
Okay. So Alberta, New York, Texas, and then some across British Columbia and Ontario. Why those cities/regions?
The original driver and thesis behind finding new sites was, where are those sites located? What the power markets look like? Can we get cheap power at scale? And a lot of that overlapped with places with a lot of renewables because it drove pricing down, created volatility in the energy markets. Today, that criteria has expanded to including where are the sites located? Where are the local population hubs? What's the access to fiber, to water, sizing of sites? And so I think we're looking at North America today. I think one day we'll be looking globally as well as a company, not in the near term, but in the long term, definitely. And so I think it's just, where do we believe that these load assets can be positioned that allows us to maintain the value of those assets for a long period of time.
I know you said it wasn't in the near term, but what other regions would you want to expand to beyond North America? If you could pick one next, and why?
The Middle East is super interesting, right?
Which
like
one?
the Middle East, so the UAE, Saudi, super interesting. There's a lot of capital, a lot of power assets, and a lot of government support. And I think not as many operators there in kind of emerging markets. We've looked at other places like South America, Africa, and ultimately what you're trading off there is like geopolitical stability relative like to costs. And so we haven't gotten comfortable there yet. But I've explored. We have like people on the team that go and they visit these countries and they meet with local governments and operators and sellers of these assets. And so we always have our eyes open, are always looking, but are also pretty focused that there's a lot of opportunity in the US and in Canada, and really want to mature and fully penetrate these markets before kind of expanding our bandwidth elsewhere.
Okay, I was going to ask you, like, why not? Why not go abroad? Get out of North America. But that makes sense that you guys want to really like excel here first and then expand beyond, right?
I heard this quote from a VC once, and it's always stuck with me. This was probably 10 plus years ago. And he said, when I have a startup that comes and pitches me for an investment, and think about if like they were pitching me the next Uber or the next Airbnb, they came and said, I have 98% penetration in Los Angeles. And now I want to expand to these 10 cities, give me $100 million. That is a lot more compelling than someone that comes to you and says, hey, I'm in 10 cities. I have 20% penetration. But if you give me $100 million, I can get to 98%. You probably don't trust the second person as much as you would trust the first. And so I think when we think about what we're doing, there's a lot we're trying to do. We're trying to get smart in a lot of different areas. And you have to balance that with precision and focus, and not be kind of spread too thin or distracted where you become average at everything instead of great at a few things.
Yeah, I like that. And I agree with that. And it reminds me of some things I see on like Shark Tank, where it's like someone has a vision and then it's like all over the place. And they're like, I was in until you said all that, you know, like you were doing well until that. Asher, I think I love
that show, by the way. It's awesome.
I'm glad we have that in common. I feel like we've covered a lot of ground here. And given that you are newly the CEO of Hut 8, what is the near-term and long-term vision? Like if we could look back on this conversation and you tell me what you want accomplished, what do you really want to get done?
We want to build a business that truly allows technologies to flourish and to impact the world at their greatest potential. And we believe that for technologies to scale and flourish, they'll need a lot of power in order to do so. And we'd like that consumption of power to feel very natural, rather than grids being affected and saying, oh no, these data centers are taking down our local power and so forth. And so if we fast forward 10 years or so, I'd like us to feel very empowered by what our infrastructure has been able to progress from a technology perspective. And again, I use the example of if Elon Musk is shooting rockets into space and is super successful there, they're going to need a lot of green hydrogen fuel to fuel those rockets. And so the scope of what we can power is really endless with all of these exciting things that are being worked on. And so as a company, we want to create a business that is able to enhance and progress society and humanity by focusing on power and focusing on infrastructure, which honestly isn't that sexy. And that's what we love is like, let's focus on the areas that are not the thing that the college kid graduating thinks is the sexiest thing they want to go get a job in, but really powers everything at the underlying foundational layer.
I love that. To wrap things up, Asher, can you tell us something else that you're watching in this industry that you think other people should pay attention to as well?
Speaking about power and grids, AI data centers consume power based on the workloads that are given to them. Like, unlike Bitcoin mining, there's a lot less power sensitivity, right? So for every megawatt of Bitcoin mining, you're spending like $1 million on chips versus 40 million for AI chips. And so you have less power sensitivity. So even if power prices are expensive, you're still willing to run it because you've spent so much money on this CapEx. I think unless data centers evolve and become a kind of microgrid that's interconnected to the grid as well, you're going to see these load spikes affect the grid in a negative way. And I think like power in one place at this scale, we're talking hundreds of megawatts and gigawatts soon, you really need to balance how that interacts with the environment. And I think if that's not done well, that's going to be a big problem that's talked about and that will need to get addressed and solved.
How can we keep track of that as people maybe not like deeply invested in the space the way you are? Like, how can I learn more about that?
I think it's a problem that people are going to talk about in like 3 to 5 years. We're talking with like large technology firms today around how do we solve both on the technology and software side and the chips, and also on the infrastructure side and building these data centers. But that's one thing I think about. It's not how do we solve the problem of building the next AI data center. Like we'll find power, we'll find a customer that will come, but it's how do we build where the world is heading and how do we start thinking about like the problems that the world is going to face once all these get built, and how do we start solving those problems and innovating towards them today?
Okay. When you solve those problems, we'll bring you back on and we could talk about it.
Sounds great.
Last thing, Asher, can you leave us with a piece of advice, something you've carried with you throughout your time in this industry? It's easy to be fixated on the momentum and the topic of the day. It's hard to have conviction and deep belief and stick with that through the volatility. We believed in this business, we believed in the sector, and we believed in kind of the story through the heights of 2021 where everyone believed, through the depths of 2022 where everyone thought you were going bankrupt tomorrow. Yeah. And today we're in a place where I think we have a great opportunity in front of us to keep on believing and keep on building. And so I think for kind of those folks listening is like, do your homework and really understand what you're building towards and what the longer vision is and have conviction in that rather than kind of changing your focus based on what the hot topic of the day is. Yeah, couldn't agree more. Asher, thank you so much for coming on today. It was a pleasure. Thanks for having me. Really appreciate it.